Oh my goodness, guys. Stocks are not looking hot today. We're down across the board as SoFi is down almost 10%. You heard that right. We're down over $3 a share on SoFi stock as every index in the U.S. market is down over 1%, except for the Dow, which, I mean, guys, the Dow's down 0.9. It's almost there. So we have to go over SoFi, the charts, what I'm looking to do, and we'll go over the stock market, other stocks I'm looking at. So let's do it. Hit the like button. Make sure to subscribe if you guys want to be a part of the Patreon portfolio, the Discord, my charts and ideas throughout the week. I break down a bunch on Patreon, guys. It's linked down below. Also pinned in the comments, or go to stocksurfest.com/Patreon if you want to join. And with that being said, let's get into it. So we are down across the board, and this is after the government reopened, right? Which the government was shut down, I forget how many days, but it was the longest government shutdown in the United States. So you would think, oh, the government is reopening, right? The market should go up, right? Well, no, it's actually the opposite. We're getting a little sell the news event right now, if you will, as overall the stock market, you could argue, ran into the government reopening, into when it thought the government was going to reopen. So it kind of front ran the move, the stock market did. And now that we actually got the shutdown, or the reopening rather, we're seeing a sell the news event. Makes sense. And we'll cover more in my next video, a little bit deeper into why we're selling off, my thoughts there. But for this one, I want to focus mostly on SoFi and some other stocks that I'm looking at. But yeah, best believe we're seeing a sell the news event as the government is reopening. And again, we'll break that down more in the next video. So make sure you guys subscribe, hit that notification bell. So SoFi, as of now, is getting clapped, right? I mean, there's no other way to put it. It's getting hit, it's getting clapped, it's getting destroyed, right? It's down 10% after hitting all-time highs literally yesterday. Yes, yesterday. We hit $32.73 in the morning. Then we saw a bit of a drawdown yesterday into the middle of the day, and then we ran into close. So we actually had a nice pop into close, back to $32, close to those all-time highs. And again, since then, well, we coasted a bit in the pre-market this morning, started trickling down a little bit, under 32 on the pre-market, and then once the market opened, literally, SoFi took a cliff dive, right? Jumped off a cliff from 31.75-ish all the way down to where we are now. We're down at $29 a share. We're down 8.4% from the opening price. So yeah, I mean, what we're getting right now, guys, is these high growth, high beta, whatever you want to call them, stocks. They're all getting hit, they're all getting hit. Maybe not all of them, but a lot of these high growth, high beta, more volatile stocks, especially the smaller cap stocks, they're getting hit today. Not because there's something going on with the companies themselves, the fundamentals. Well, maybe some of them have some fundamental problems, but this is just a market-wide sell-off. And when we're getting the VIX up 9%, when we're getting indices, down on uncertainty, what do you think's going to happen to these higher volatility names, these high beta names? They're going to get nailed. And that's what we're noticing with SoFi, a bunch of other stocks, So I'm not panicking by any means. The overall market, it's still very bullish when you pull the layers back. When in doubt, zoom out. So I think this is simply a little pullback. And like I said, the market stocks ran into the government reopening announcement. I mean, we got news a couple days ago that the government shutdown was coming to an end. So, of course, the market ran with that. And now we're seeing a little sell the news event. I think we're going to come right back up. I really do. And if we look at this 10-day, 30-minute chart on SoFi, we're still well above the low from the end of last week. I think on last Friday, we hit $25.60, $26 a share. We're well above that now. We're up 12% from that point On the 20-day chart, you guys can see, right, this still looks pretty good, holding an uptrend. And on the 4-hour chart, Sofi is well above the 180 SMA, which has been support this entire rebound throughout this entire year. If you guys take a look here, we're right above this moving average, which is critical, so this is simply, man, a healthy pullback. That's how I categorize it, especially on these larger time frames. Healthy pullback, that's pretty much all it is. And let's say, for example, SoFi falls through this trend line, the 180 moving average. Let's say we start going 25, 24, 23. All right, that would be the break of the trend. It would no longer be a little pullback at that point. But as of now, we're looking great. This honestly could be a nice entry on the dip, especially as a swing trade, So for me, I'm not in it as a swing trade right now. I'm eyeing it up for one. But obviously, I'm in it as a long-term investment. I haven't sold shares. I've been holding this whole time, guys. So SoFi looks phenomenal on the charts. We're getting a healthy pullback after all-time highs in the midst of a pretty nasty red day in the market. That's pretty much all it is. As again, all these high growth, high beta names are getting hit. It's simple market mechanics, right, guys? So what do you think? Let me know in the comments about SoFi, the overall stock market. I'm curious where your head's at, guys. And let's see some other stocks that are either down today, that are moving. So wait a second. What's going on here with Planet Fitness? Hold up. This stock is ripping. I noticed they popped a lot last week. Now we're breaking through $100, $105 plus a share. So Planet Fitness must have just crushed earnings. I missed that, though. Let's see what they did. EPS adjusted of 80 cents, which beat the 74 cents expected on sales of 330 versus 323 million. So double beat for Planet Fitness. And let's see their guidance. They raised their adjusted EPS guidance from 287 to 290, now to $3 to 303 versus $2.96 expected, but they did lower their sales guidance a little bit, but it's still above the estimate, which is good. So Planet 13. I forgot about that company. You guys probably don't know about them. But Planet Fitness, oh my God, I don't know why I thought about Planet 13. It's been years since I've even thought of that company. But Planet Fitness, man, looking interesting. We have a little cup and handle on the 3-year chart, on the 1-year chart as well. You're noticing it. So now we're pushing towards 110-ish, 115. That could be the breakout spot on PLNT. Let's see what else. I mean, it's already kind of breaking out, but that's where the momentum could really start to pick up. Let me see what's down today, guys. Disney's getting squashed. I think they reported this morning. So, yeah, I mean, what else is new? Disney's going down. I mean, I could have told you that. The stock's been flat for a decade, and, it's technically down if you're accounting for inflation, opportunity costs, if you were in the stock. I mean, if you're in this stock still, I don't know what to tell you. But, man, this thing is getting destroyed. Let's see here. Adjusted EPS came in at $1.11 versus $1.04 expected. So that beat, but sales missed. $22.46 billion versus $22.74 billion. So they missed sales. Let's see here, guys. They declared a cash dividend. All right. I could care less about that. I mean, yeah, they're giving, all these cash dividends now. I mean, they used to pay a dividend, then COVID came. I think they cut it back then. Now they're just slowly starting to reinstate the dividend, I'm pretty sure. But, I'm not a big fan of dividends, and there's a reason why they're giving you a dividend. It's because they don't know what to do with that cash. They cannot invest it within the business and grow the business. I mean, that's the reality. That's why companies give dividends. It's like a thank you to the shareholders for holding their stock. That's the way I look at it. It's like, yeah, I mean, this cash, they're giving it to you. You might think, oh, it's free money. It's a dividend, right? But they're really just taking it out of their earnings. They can't use that capital to grow their earnings more or to grow their top line or to reinvest in the business, that money's better used as a dividend to you. That's the way management thinks about it. They're like, oh, what should I do with this $1.50 a share? Should I reinvest it in R&D and build the grow the business, or should I give it to the shareholders so they can get some cash because our stock sucks, right? Disney. I mean, look, Disney, it's not the best stock. Let's keep it real. I mean, it's not the worst stock by any means, but look, if your performance is what Disney's has been over the last 10 years, I mean, look, it's at 105 now. It was at 105 in 2015. Yeah, shareholders are not liking that. You think Disney shareholders are happy, right? They're not. So yeah, that dividend kind of keeps them at bay, but it's like I don't get it. I don't get it. Why are you still in Disney? I don't know. Maybe it goes to 200 in the next 5 years and it ends up being a great investment at 106. I don't know. But yeah, I mean, I'm not the biggest fan of Disney and dividends in general. That could be kind of where we wrap it up. I'm not a dividend hater, but I feel like people fall into the trap of, especially when they're younger, in 20s. I mean, you have no business investing in dividend-only stocks or chasing dividend stocks if you're in your 20s, 30s, 40s. Like, what are you doing? It doesn't make sense. It's tax inefficient. You're way better off buying growth stocks or even a VTI, which has a bunch of everything in it. You're way better off doing that than chasing these dividend stocks. First of all, these dividend stocks, they grow way slower a lot of the time. Again, they pay dividends because they can't, they can't grow the company with that money. They're giving it to you instead. And I'm not saying all dividend stocks are bad for everybody. I get dividend stocks. They have their time and place. But if you're in the growth period of your wealth building journey, if you're in that stage where you're growing your wealth, you want to invest in more tax efficient strategies, growth companies, in my opinion. And then once you build a massive nest egg, okay, now you can put, let's say you have $10 million when you're 60, big, massive nest egg. Now you can put, okay, 2-3 million in dividend stocks and make like whatever that is per month, 10, 20, 30 G's a month off your dividends. Now it makes sense, right? But if you're 20 and you're, you have like 10K, why are you buying dividend stocks, man? Do you need $22 a month? You need to, what are you going to do with that? It's like, it doesn't make sense. So I'll leave it at that. Let me know your thoughts in the comments. Hit the like button, subscribe, join the Patreon for my portfolio updates, guys. If you're interested, there's a Discord as well, plus more linked down below. Also pinned in the comments, or go to stasserfest.com/Patreon. I'll see you guys there. And with that being said, cheers. Have a great rest of your day.